Hello, everybody. We are here together again for the second day of the international conference, The Future of Europe. And at this moment now is scheduled a second plenary panel that is focused on a very specific topic of regulating the financial system by the public institutions, by the state, especially regarding the capping of interest rates. That is an interest, a specific interest now of the European Union, European Council and European Parliament started an initiative regarding this measure of capping interest rates for populations, for beneficiaries of financing schemes provided by financial institutions. So now today we are gathered here together with specialists from financial markets, from central bank, from banking system, from non-banking system, in order to discuss this problem. Before starting the discussions, I want to say some technical about some technical aspects. You have around 15-20 minutes. You have the possibility to share the presentation, PowerPoint presentation with the audience. The questions and the comments will be collected from the platforms, from the online platforms that broadcast our conference right now. So the conference is live broadcasted with the support of our technical staff. So the first presenter is Marian MARCU that will present us in those allocated 15 minutes, 15 minutes, the results, some of the results of a very important study that was conducted at the level of Romania about a lot of things, including financial education, accessibility of the financial system, and so on. So I give the floor to Marian MARCU, and I suggest that in the beginning, all of you, in few words, to say something about you. Yeah. So Marian, thank you that you are here together with us. You have the floor for around 15 minutes. Good luck.
Thank you, Cristian. My name is Marian MARCU, and I am managing partner of Novel Research. Novel Research is a market research agency based in Romania, and in the last months we conducted some surveys about financial health, financial education, and of course something about regulation in financial market. And this is the key point that I want to present here to set up the background for next speakers in order to expose correctly their ideas. So I will start with share screen, and okay. Do you see the screen?
Yeah.
Oh, perfect. So I named the presentation Divergent and Convergent Opinions because there are a lot of divergent opinions in Romania. Of course, each segment has his opinion, but what is interesting in this context is the fact that there are also convergent opinions, and what we have to do is to study a little bit what the divergent opinion are and how we find a solution to go to a convergent opinion, and in this respect to solve the problem of health, financial health in Romania, and also financial education. And after that, to see the full picture of what is needed in terms of financial regulation. Okay, we have here, let's say, a big piece of research, which include 3 phases. First phase is about qualitative research, and we took 12 in-depth interview with key opinion leaders. The second phase is quantitative research, and in this phase we try to find the position of entire population of Romania, and is the only one quantitative stage, because here we have a big number of people, entire population of Romania, and in phase 3 we have qualitative research, 33 in-depth interviews with key stakeholders on financial market, official from Ministry of Finance, member of Romanian Parliament, and also of European Parliament, National Bank of Romania, Ministry of Education, and other state authorities. So the idea is to define in the first step what is the financial health of the population. And I will start with consumer opinions. And now here we have two, I would say, an important question about the financial health. First one, how likely is for your household to have 5,000 RON available in the next month to face an emergency situation? And you can see that almost half of the respondents, for almost half of the respondents, is impossible or extremely difficult to have an amount of 5,000 RON available. The next question is about the savings. And it sounds like, how many months could you live from your savings to which you have immediately access? And the number is extremely high. 72% of the population don't save money, or the money the savings last between 1 and 3 months, which is extremely low. So the conclusion is a great degree of population does not have enough savings in order to live out of our resources in the case of unexpected events. And to conclusion, on short and average terms, access to a loan is extremely important. I would say is essential. And on long term, because we need a perspective on long term, the investments are seen as the only sustainable solution with effect on the standard of living. What I would like to mention is the fact that all the conclusions in the presentation are not our conclusion. We are just a speaker who tell us the opinion of key stakeholders in Romania that I mentioned before. So I will mention another key point here. If you look at the left side chart, is the fact that for half of the population is impossible or extremely difficult to have 5,000 RON available for an emergency situation, and another half of the population has this possibility, which means, let's say, a polarization of population from this point of view. Another conclusion about this subject is the difference between segment of the population. And the first one, and I would say we have here 4 contrasts which are extremely important to solve in the next years. Okay, the contrast between private and public sector, and the connected to meritocracy of private sectors and disconnected of meritocracy in public sectors. The difference between urban and rural, and rural is seen as disconnected from a financial system, between youngers and seniors. Seniors seen as disconnected from digital technology, the connected and disconnected from continuous education. And here we have people who try to educate themselves continuously, and people who are not interested in constant education. All of this leads to a growing population polarization. You can see in the previous slide almost the same conclusion, the polarization of the population. And you'll see in the next slide almost the same things. Another conclusion is from qualitative research. And as I mentioned, we have interviews non-banker financial institution with banking environment, with political environment, also with academic environment. And what is interesting here is the fact that all of them have different perspectives in terms of financial health. If you take into account, for example, non-banker financial institution, they are looking at ensuring a decent income for population, an increasing income for population. On the right side, you see the perspective of academic environment, which define financial health in terms of investment and entrepreneurship. So there are a very different perception of financial health, which starts from necessary income for a decent living to investment and entrepreneurship. What is important here is the fact that lack of consensus means a dilution of each involved actor's effort in the national economy to reach the common goal of economic growth. And this is a big point to be solved in the next time. What I would like also to mention is the fact that perception related to financial health are closely correlated with how the financial health is defined. For example, a positive perception is presented in the segment of political environment, which see the financial health as household budget management. And from this point of view, the financial health is considered positive or very good. On the other side, we have academic environment who ask for investments and entrepreneurship. And from their point of view, financial health is, for Romania, is extremely low. What are the causes that determine the low level of financial health? We have here in the left side some causes that can be addressed in the short term and average time frame. The spending of existing savings by the population during the pandemic, what has happened after the pandemic, and we see an increasing trend to spend on consumption. And we have to correct these consumption habits of Romanian and to direct them to investment. Accessing a loan is also an extremely important point, because we can see again the disruption in terms of economic activities in some cities and also in some regions, and this is extremely important for people to access a loan in case their job is not so sure in this period. We have also a lack of opportunities for people to invest money, and we need some to create some opportunities based on European funds that are available in the next period of time. We have the problem of consumerism, and the most important, the lack of financial education. On long term, what we have to do is to restructure the educational system, which is perceived not performant, to change the cultural models and to go forward to consumerism, and also the demographic status, because all of us know that demography of Romania is in declining trend. In terms of financial regulation, first of all, we have to define what means financial market. And in most of the cases is represented by saving products and credit products. And there are two, let's say, part of the financial market. First is banking sector, which is associated with a feeling of aversion toward the banks, greatly appreciated as being justified by key stakeholders. And as a key measure for the next period of time, a more active involvement in supporting investment is asked from banks, and also a more consumer-centric attitude to support individuals in order to become creditworthy, and find support for finance personal development. On the other side is a non-banker financial institution, which are perceived as temporary help and the last resort to ensure financial for vulnerable groups, those who bank consider not viable. For them, starting with the growth of standard of living, expectation from non-banker financial institutions are great in order to reinvent with new products and investment services. Their role being that to ensure competitiveness of banking system. Another point is from consumers side, and we put here two questions regarding the regulation. First is about limiting the interest rate to the law, and the second one in the right side to limit the level of indebtedness for people. As you can see here in red, almost half of the population do not consider a good idea to add financial regulation to the market. And the most important things, which is people afraid a lot, almost 60%. Access to loan for small income people cumulate support of 60% of active population, and are recording a high degree of agreement among all social demographic segments. Okay, the next one is about illegal. Sorry, it's about illegal form of loaning, and we have also a few questions about usage of illegal loaning. On the left side, we have the profile of those who are interested in illegal loan. And we have extremely interesting demographics. For example, they are with they have a superior level of financial health. That means have a family budget and make savings. Register a small percentage to over indebtedness. They are young, small family, 3 members. That means 1 child. People with average education, especially superior education, a resident of urban environment, especially in Bucharest, and income above average. What is interesting here is the fact that stakeholders of financial market see another segment for this illegal loans, which is more related to non-educated population, medium age groups, and resident of rural area, which seems to not be in line with what we discover. On the other side, we have how they interact with illegal loaning. As you can see, a small number are taking in contact with illegal loaners, with loan shark. But in the left downside of the page, we see a big afraid about this situation. Most of the people are afraid about this kind of people who offer illegal form of loaning.
Marian, I suggest to go to the conclusions in order to leave time for the other presenters. We are 5 presenters, so please go to the conclusions, because I want also to discuss, to give some time for questions and so on. Yeah,
sure.
Please.
Sure. So I'll point out just the conclusion in order to be short enough. The high acceptance tendency is to let the market to self-regulate through demand and offer, and this is the conclusion for stakeholders, not our conclusion as I mentioned previously. Another point is regarding to European directive, and we see here in the dark blue those who consider that we have to implement exactly the European directive, and with light blue, those who consider we have to implement an European direction in some, let's say, customized from Romanian market. And what you can see here is the fact that majority of respondents consider that we have to adapt to Romania's specific Romanian condition the European directive. Another point is related to how the regulation are perceived. So the extent there are two forces which are in line with regulation. The first is the existence of impulse from the population or the political environment, and the second one impulses from European Union or any external factors. And the Parliament is considered less proactive to come with new regulation. And one conclusion about the financial education is considered extremely low in Romania, and it's not our conclusion, it's a conclusion done by Standard & Poor's. You can see here with dark blue the highest level of financial education, and with light blue the lower financial education. And Romania is on the last place in Europe in terms of financial education. And on the right side, we have also a chart between financial literacy and the index of inequality. And you can see here Romania in top. That means a lot of inequality between population, also on low financial literacy score. Also, our question from the questionnaire, 80% of the population consider that they need financial education. Also, the entire population needs financial education. And that's all from my side.
Thank you. From my side, I have some comments, short comments about a few very important conclusions of your study that should be connected with the topic of our discussion of today. So in the case of Romania, we are talking about a country with a very low financial literacy. We are talking about consumers that are quite poor to save so much, that have a limited accessibility to the financial services. And now the real question is the following: how interest rate capping that is discussed today at the level of European Union can solve at least these 3 identified problems at the level of our financial system, Romanian financial system, that I think that is not only here, that I think that are not only here present. And now I want to salute Agnieszka. I think that I pronounced well the name. She joined us. She succeeded to join us this morning, and I'm inviting her to take the floor for 15 minutes to present the point of view, maybe of the Polish situation, and to emphasize the topic that we are proposing here. Agnieszka, you have the floor. You can share the presentation with us also, if you.
Good morning. Thank you, Cristian. I have no presentation today, but I will try to speak to you just about the Polish case. And if I'm too long, please stop me, because I can speak about it for hours. And well, I think that we need to leave some time for the discussion. My name is Agnieszka Wachnicka. I'm the president of the board of the Financial Market Development Foundation. This is the organization whose aim is to promote high ethical standards in the consumer credit markets, in particular the part of the market serviced by the non-bank credit institutions. We cooperate with the lenders, we conduct a dialogue with the regulators and the supervisors, and we also do our best to educate consumers. And first of all, I would like to thank you very much for the invitation. I'm honored and pleased to be here with you and to share my point of view. I'm the practitioner, albeit with the supervisor and regulatory background, because I used to work for many years in the Polish Ministry of Finance, and I was directly involved in developing a cap on non-interest cost of the consumer credit, which is currently in force in Poland. And then I was also worked for in the Financial Ombudsman's office, where we actually discovered the unfair practices also in the consumer credit market. And now I look at this market from the perspective of the key market players. Therefore, I think I have the mandate to assess to what extent the price capping translates into the higher level of consumer protection, which is usually the underlying assumption of introducing caps. And I will show you the Polish example, but I also refer to the CCD plan, CCD2, because the Commission in the proposal for the CCD2 included also price capping. So coming to Poland, we have two types of caps. The cap on interest cost, and this is a general cap. I mean, it applies to all contracts that are concluded in the market, regardless whether these are B2B, C2C, B2C, or C2B. So any contract that needs to apply this cap. And this is currently 8% of the amount per annum. And it depends on the interest rates set by the National Bank of Poland. So the lower the rates, the lower the cap, the higher the rates, the higher the cap. And the second cap is the cap on non-interest cost, and it applies exclusively to the consumer credits in the meaning of the CCD. It means it doesn't apply to mortgages, it doesn't apply to B2B contracts, it only applies to the consumer credits that fall within the scope of the CCD, excluding credit cards and overdrafts. And this cap has two components, fixed and variable one. The fixed one is 25% of the total amount of the loan, and it is meant to cover the costs that a creditor incurs and that are not independent of the loan term. It means the creditworthiness assessment costs, the preparation of the loan, maintenance of the sales network, and so on and so forth. And the variable part amounts to 30% of the total amount of the loan per annum. And it's meant to cover the costs that occur in the credit period. It means the rising credit risk, the maintenance of the loan, the debt collection, and so on. What does it mean in practice? In practice, it means that if the creditor grants a loan for a month, he's entitled to charge a maximum of 27.5%. If he grants the loan for a year, then he's entitled to charge a maximum amount of 55%. So it's 25 plus 30. But if the loan is granted for more than 1 year, then the maximum is 100% of the total amount of the loan. So no more than the 100% of the total amount of the loan. The purpose of this cap was obviously to increase the consumer protection in the consumer credit market, in particular in the part of non-bank lending market, because the Polish market, I think the Polish society is very similar to the Romanian. We also have a lot of people that are financially excluded, excluded from the banking sector. And they find and they can obtain loans outside of the banking sector in the non-bank from the non-bank lenders, but these are still regulated entities. So this is still the regulated market and not the shadow economy. So the cap was meant to, on the one hand, to increase the consumer protection in the market, and on the other hand, to enable the creditors to do their business, to perform their business in a profitable way. If I to assess whether this cap really did its job, I would say not necessarily. Why? First of all, the cap is a compromise of a sort, and as with any compromises, it usually satisfies no one. So when we take the loan, a small amount, very short-term loan, nominally this cap could be really low and doesn't allow to even cover the cost that the creditor incurs. On the other hand, when we take a long-term and a high amount loan, this cap nominally could be very high and even unjustifiably high, we may say. So this is a kind of compromise. We have so many offers in the market right now that it's really hard to apply a one-fits-all measure to all of them. And applying this measure means that the supply is shifted from the price of equilibrium towards the offers that are more profitable to the creditor. What does it mean for the consumer? That doesn't mean that the consumer doesn't obtain the loan he really needs or wants. He obtains the loan that the creditor actually offers. The second, we observe that there are many players in the market. I don't mean the biggest players because they are usually well established and they adapt to the new rules. But we observe there are a lot of market players that who, well, we may say, start to specify in circumventing the law. So they invent different constructions and mechanisms that are potentially, in theory, maybe in line with the provisions, but not in line with the objective that the regulator wanted to achieve. So if the Office of Competition and Consumer Protection challenges the practice, well, they change the practice and immediately start to apply a new one, which is still aimed at circumventing this cap. Third, what we also observe that introduction of administered prices results that in the average level of prices in the market going up towards the upper limits. Why? Because the lenders come to the idea that since this cap is allowed, they may apply it. So they stop competing with the price, they start competing with the other factors, like the speed of the offer, like the simplicity of the process, affordability, but they stop competing with the price and they tend to get these prices up. And finally, looking at the Polish example, we may say that these caps very often become a political tool and serve populist purposes. We observe it right now in the Polish market. During the pandemic, our government decided to decrease the cap on non-interest costs to the level of 21% per annum. It is 15% the fixed part and 6% the variable part. And what we observed at the market at this time was that the sales in the non-bank lending market decreased by around 30%, both in terms of value and the number of loans. Around 25% of the players left the market, and the sector generated loss of nearly 67 million euros. At the same time, we saw the flourishing market of private and quasi-private loan offers, boom in pawn shops and other lending activities that are in or on the edge of the shadow economy. But despite this, the Polish government and one of the Polish ministers came up with the idea to decrease this the cap on non-interest costs permanently to the level of 20%, 10% fixed and 10% variable part. And the main, of course, the main reason for that is to protect consumers from falling into a debt spiral. And the second reason is that the non-bank lenders shouldn't earn that much. Okay, we show that they don't earn, they lose, but that's not actually an argument. And this idea of the new regulation came up just that without any thorough analysis of the market. It's not based on any market data. It's not based on financial results of the creditors. It's just that someone thinks it should be right. I have been observing this market for many, many years from several angles, and I may say that it's not going to work. Why? First, because those who want to act honestly and with the highest in the interest on consumers and apply high ethical standards will be forced to leave the market. And this is the case of Slovakia. Actually, when they over-regulated the market, the non-legal non-bank lending market almost ceased to exist. And there are no non-bank lenders, but the shadow economy works well and is growing as far as we know. And on the other hand, we have those entities whose business models are based on circumventing the law. They'll still be doing that. Who loses here? The only one who loses is the consumer, because he doesn't get a proper offer. Second, elimination of the supply doesn't eliminate the demand. This is very often the misconception of regulators. If we eliminate loans, then people will stop getting into debt. Well, no, this is nothing more than wishful thinking. The demand will not disappear, it's simply be satisfied outside the legal market. Who loses here? Well, everyone. Consumers, business, and the state budget as well, because it is deprived of tax revenues. Thirdly, the legal market is controllable. The shadow economy is completely beyond any state control and does not comply with any consumer protection standards. Possible abuses are exposed, so when the consumers has already suffered damages, combating is almost impossible or extremely difficult. And unfortunately, the European regulator decided to follow this path, and the European Commission's proposal for the CCT2 includes a provision requiring member states to impose price caps. The European Commission decided that the member states should choose from one or more of the mechanisms, and these are cap on interest, cap on APR, or cap on the total cost of credit. To be honest, it's not entirely clear to me what purpose this regulation should serve. If it is to serve to ensure better harmonization in this area across the member states, it's not going to happen. Why? Well, because the member states, there are still three mechanisms to be chosen, but the member states may choose one. So one country may choose the interest rate cap, another one the APR cap, another one interest and APR, or interest and APR and total cost, or mix of them. And still the member state may choose the levels of these caps. So the harmonization is not possible here. If the intention is better consumer protection, then I think that's not a good way. it should be left completely to the discretion of the member states to decide whether they need to apply caps and what type of measures they need to apply to ensure better consumer protection. Let's take, for example, Germany. There are no price caps in Germany, but still the prices of credits are under strict control. So we don't need to impose price caps to control the market. We may do this by applying another measures. And let's, for example, take the APR cap. I personally think that the APR cap could potentially work in the markets with a well-developed banking sector where there are higher, longer-term credits offered. But in the markets with the developed non-banking sector, where there is high demand for short-term and low-amount loans, this is not going to happen because the APR for these loans is usually very high. And it's not because the nominal cost for the consumer are high. It's because the formula for calculating APR assumes that the later consumers repays the loan, the better. I encourage you to experiment with the APR calculations. I do this sometimes, and I'm really surprised with the results. Because when we, for example, compare the APRs, the same credits, the same amount, the same parameters, like, for example, only interest with no other costs, and we compare the different methods of repayments, weekly installments, monthly installments, and balloon repayment at the end of the loan period, we get completely different APRs. And what is surprising, the highest APR is when the consumer repays weekly, and the lowest when it is balloon repayment at the end of the loan period. But when we compare the nominal cost to the consumer, it's completely opposite. The lowest cost when the consumer repays weekly, and the highest when it's balloon repayment. So the APR can be completely misleading here, and I don't think it's a good mechanism to to regulate prices in the market. So in my view, this proposal should go towards leaving the discretion to the member states whether and which measures to take in order to better protect consumers. And we need to bear in mind that the price caps tend to distort market equilibrium, particularly if they were set arbitrarily. They provide temptation to seek solutions that circumvent the law, and in addition, they may lead to the situation that average level of prices go up. And okay, that's from me. Thank you for your attention. If you have any comments and questions, I will be happy to answer them.
Thank you. Very, very sharp. I liked your presentation. So the presentation catched me very, very well. So I want to say that we conducted a theoretical study a few years ago about the effects, potential effects of interest rate capping. A group of professors from Bucharest University of Economic Studies, and all our conclusions now, listening you, I see that all our theoretical conclusions are perfectly confirmed by the Polish case. Yeah, so we discussed that this capping of interest rates will have merely negative impact on the market mechanisms, and finally will generate more problems than solve the problems of the market. So a very, very good case study, and thank you for sharing this experience with us. And now I want to give the floor to another speaker that is coming from National Bank of Romania, Cristian POPA, that has also good insights on this market intervention of the state. Because today, for instance, in Romania, we have problems with energy sector, and again, price capping is seen to be the only solution in fighting for fighting with this market uncertainty, market volatility, totally neglecting the fact that naturally the prices are volatile, are not fixed. So this is something natural of the market, but the state totally ignoring the economic arguments, totally ignoring the empirical evidences, like previous presenter emphasized here. They are continuing to fix the price, to keep the prices, saying that this is the only solution. Before giving the floor to Cristian Popa, I want also to address a question. You can see the questions that are coming from YouTube, from Facebook, also in the comments section. So you have this question for you. So you should prepare the answer at the end, each of you. So I will give the floor to all of you at the end to answer to the questions that are coming from the viewers. Now, Cristian Popa, you have the floor. Please be
explicit.
Express your send your message or deliver your message in those 15 allocated 15 minutes. Thank you.
Thank you very much, Cristian. Good morning, everyone, and thank you for the invitation to participate in this plenary discussion. I'm very glad to be here. It's the second year in which I am invited, so I guess that I said something interesting last time. I will try to do it again today. The subject I will comment on is named the state versus private markets, who loses. A few words about me. I am a board member of the National Bank of Romania, but my career was for more than a decade in different roles in the private sector, in financial markets, doing equity analysis, portfolio management, pension fund management. So I have both of the perspectives, from the regulatory side and from the real financial market side. I'm also a member of the directorate of CFA Romania, an association of finance professionals that are holders of the Chartered Financial Analyst designation. What we do there, we promote financial education, we promote financial independence, we support the professional finance industry for actually doing a greater good for the society. For example, we have Generația I, the I generation campaign, where we create content, we create podcasts, media, opinion polls, white papers that support the idea of financial independence. But the ideas that I will present today are personal as a free-thinking economist and do not represent the point of view of the two institutions that I am associated with. And actually, when it comes to consumer protection, there is another public institution, ANPC, but it's a separate subject. I will talk about what happens when the state interferes with private markets and about its effects. Usually, the state intervenes to protect consumers, but not only. When it comes to consumer protection in financial services, my opinion is quite clear, and is that the best protection is education. The best protector of my interest is me, and to be able to do this in an effective way, so not to be the disadvantage by others or by my counterparties, I have to educate myself, to learn, to understand what I'm buying, at what price, and in what conditions. It is easy to believe that there is a brilliant mind somewhere in the state structures which identifies each and every situation / transaction when a consumer is disadvantaged. But this beautiful mind doesn't exist. It cannot exist. A bureaucrat will never be able to forecast or assess all the situations in which one part of the trade is disadvantaged, whatever that means, by another. Nor will an artificial intelligence supercomputer. I'm quite convinced that even the smartest computer cannot do this. No one will, because the market's order is spontaneous. We're talking about billions of people and maybe trillions of transactions. Nobody is able to defend one party or another. The best mitigating factor is education, and financial education is the main thing here. I would say it's not a luxury, but it's a necessity. I'm coming from the private sector. My background is in asset management, and it would be naive for me to believe that, for example, when managing portfolios, the state would protect my portfolios from declining in price. It's the same with prices in the economy, in the free markets. prices must be as free as possible so that demand can be matched by supply. I recently wrote an opinion. It's called Defending the Markets, or In Defense of the Markets, but you can guess the message. I will point out a few ideas that I wrote there. First of all, free markets have brought humanity to the highest level of richness it has ever been. This richness was brought by capitalism. What socialism brought, we know from history books. Also, it has brought us here with the help of free markets through increasing the openness of free trade. Worldwide poverty has decreased significantly, and I give their data from the World Bank. If in 1990 almost 40% of the world population was living below the absolute poverty line, which means $1.9 in 2011 purchasing power prices, 30 years later the same figure has decreased to around 10%. So from 30% poverty rate to from 40% to 10%. This has happened due to globalization and trade liberalization, factors that have contributed fully at increasing the number of jobs in emerging markets, stimulating investment, productivity, and implicitly economic growth. International commerce has increased during the same period from 40% to 60%. I would say that, is it a coincidence? I think not. I think the two have worked together. In spite of these evident facts, it is surprising for me that there are still sometimes quite loud groups of people that promote protectionism in the name of national interests, and this group refuse the evidence in order to protect their some categories or industries for which they usually have a direct interest. And they do this in spite of the fact that liberalization increases the well-being of everybody, but especially for those vulnerable. In the same article, I bring three empirical examples. That one of them is the one mentioned by Cristian also. I want to point out that usually these interventions that are justified by anomalies in the markets or exceptional situations, which I argue that if we say that everything is exceptional, this is clearly a road to serfdom, in the words of Hayek, the road to this omniscient state that will fix everything, every problem that we have the impression that exists. And at the same time, I'm not completely ruling out the possibility of actually being in an exceptional situation, like a health crisis, for example. But I would say that the issue is where you draw the line. What is exceptional? If everything is exceptional, then we're doomed. The first example that I give is the rental market in Berlin. 4 out of 5 Berlin citizens rent their apartment. At the same time, 56 of them have voted recently in a referendum for nationalizing over 200,000 apartments. Their problem is real. Rents have increased. But my question is this: is nationalization the solution? The question that I argue that should be asked is why there are not enough houses? Isn't the state that intervened just 1 year ago by capping rents? I say that this is one of the sources of the problem. Previous intervention. Also, I say this: how would the nationalization or the rent cap fix the issue? Will it increase supply of houses? Will there be more houses for the people? No. For me, it's quite clear. Also, we cannot imagine a situation in which all Berlin citizens can live in the city center, the same as thinking that all the Germans could live in Berlin. Even if they do want this, it's quite impossible because resources are limited. So it is just that there are not enough houses for everyone. But if not through prices, then how else could we allocate these limited resources in the market? I'm moving to the subject mentioned by Cristian, the energy prices issue. There are tensions in the energy markets. We know this. Everybody is looking at governments for solutions. But what the states are not saying is that even though we look at states for solutions, it may be the case that the state could have generated, or at least in part, the problems in the first. And the question I'm coming with is this one: isn't it the case that maybe closing the mines and closing the electricity generating capacities using fossil fuels contributed to the current crisis of energy? Also, maybe it's the CO2 certificate scheme that pushed these fossil fuels producers out without putting something similar in place. The renewable energy is coming, but it cannot fully replace the fossil fuels. So it may be the case that trying to solve one problem like pollution, which is a fair thing to do, it has created another one or even more, probably without intention, I would say, but feeling betrayed by the free markets and looking at the same state to fix this one also, let's say, through even more interventionism. I don't think it's a very smart idea. In Romania, we also have vast energy resources, but the state is not allowing them to be explored. It's ironic and it's sad that on the one side we're facing very high energy prices, so there is a market that is not in equilibrium, but on the other part, the state is not creating the legal and fiscal framework for exploring the undeveloped energy resources that the country has. I'm talking about the Black Sea gas. Current rules do not allow private companies to explore that gas, but we need it. So I think the question is how we look at the problem. Isn't that we should support supply to fix it? The third situation, empirical situation that I approached is not that close to us. It's in UK, where changes in the free movement of labor rules have also created unintended consequences. It seems that they have a deficit of over 100,000 truck drivers, and because there is a lack of truck drivers, it seems that nobody, or at least there were not enough drivers to drive the gasoline trucks. So we have seen on TV, on the internet, huge waiting queues for gasoline in front of the gas stations, like the ones we were seeing in our previous regime. And you have to ask again, why? Is it the market that failed us? I would say no. It's the state. It's what the people voted. But it's important to know that if we disturb the supply, then the market will act accordingly. And at the end of these three stories, I ask myself, if the markets serve us that well, and we have this long-term picture, then why there is still the impression that from time to time they betray us, so that we go to this superior authority to fix things. I would conclude in saying that we like the benefits of the markets, but not the costs. And through cost, I understand the adjustment to the new equilibrium. But the solution is not to intervene the state. The solution is to let the offer grow. When the prices they are growing, we have to let the offer grow. And where I want to land is that interest rates are a price of one thing, of money. If we replace rent with interest, the rental issue in Berlin with interest, then we have the same conclusion. And let me answer to the question that names my speech today: who loses? I would clearly say that the consumer loses. Not only him, but he's the one that loses the most. Price regulation is the most clear example in which the consumer actually loses. When the state establishes a maximum price, the consequences can be only one: limiting, reducing, or even eliminating the supply, depending on what that price is. Whether we're talking about a food product, gasoline, or capital, so the price of money, the result is the same. It is quite probable that some of the buyers that were willing to pay that price to be de facto excluded from that market. The characteristic of the free market and of the market price is that it tends to balance demand with supply. But if regulators or legislators set these prices at a different level than the one set by the free market, then this balance is disturbed. It is the same when we talk about the price of capital. if the price that was set by the regulator is lower than the economic cost, then the supply of that product basically disappears. On top of that, regulating the interest rate too low can discourage savings. So another issue. So this is the main thing that I see with capping interest rates. Of course, the legislators have the power to decree maximum or minimum prices, but the question is whether or not they can really achieve the goals they want to do, because laws in the parliament are one thing, but the laws of the economy are a different one, and the laws of economy don't account for the laws of the parliament. I will try to close. Classical economists often spoke of the impossibility of price control. What they were actually saying is not that the decrees are impossible, but that they cannot achieve the goals desired by the governments, and that they worsen the situation, in no way improve it. It is very probable that, according to the intention of the legislator, that is the final result of his interference, of this interventionism in the functioning of the market, will be even more undesirable than the initial intentions. Mises tells us that there is a long history of price caps. Kings, dictators have tried to meddle in this market phenomenon. Did they succeed? No, they didn't. Their attempts failed. Market laws cannot be contradicted by those laws made by the regulators. We are a country that lived in socialism, and I think we should know better this, because we have lived through this. Thank you very much.
Okay, thank you, Cristian. I want to say that you draw a very important conclusion. Education is the solution, to better protect the consumers, and also you emphasize the negative impact of this kind of regulations on the consumers' problems. I want also to highlight the fact that interest rate is a price. It's a market price and should remain a market price, meaning that the demand and the offer of capital should be the most important drivers of this price. And why is important to defend this price to be a market price? Because always the market prices are including a useful information for all the participants to the market. So by capping, by fixing, by altering this price, this information will miss for everybody, and the chaos will replace an order, a natural order that is based surprisingly on this market volatility of these prices. We have an order that is better than the planned chaos that is introduced by all these kind of interventions. Now I want to give the floor to Florin Dâng NESCU, because he will discuss about the market failure, always neglecting the state failure. The market always is failing, but the state is perfect. He is never failing when he is fighting with the market failure. So, dear Florin, you have the floor, please. 15 minutes. Thank you.
Thank you very much. I have to give a big thank to Agnieszka and Cristian, because they practically changed my presentation. What can I add after their presentations? But of course, my perspective, it is of a professional, let's say, not a politician, of course, but a professional in financial market, 25 years experience across function in the market. So I will try to speak as an economist, which is very important, and some evidence about the Romanian market, but not only the Romanian market, all the countries in the region. I have to remind that all the countries in the region had a big fight to go to the free market, okay, after the communist market. And the communist market meant at that moment to control the quantity and the price. We have to say that almost theoretically and practically, the turnover equal quantity multiplied with the price, okay? So we have the experience in Romania when they designed and input it in the market, the tax on asset, right? And I have to remind that the tax on asset in Romania meant to control the quantity and the price, because otherwise you can be taxed with a 60 times higher tax comparing with some countries which had such a tax at a certain moment, okay? In terms of profit divided to assets, let's say return on asset, okay? Romania, the banking system in Romania had an average of 0.4, and the tax at that moment was 1.2. So 3 times higher than the profitability of the market, of the financial market in Romania on an average on 10 years. But also has some conditions that you can diminish or to have a discount on the tax if you are increasing the quantity, you are increasing the selling of loans in Romania at a certain figure, and you can have another diminishing with a 50% on the tax if you are diminishing the price or the spread, interest rate spread. And I had a title in the media at that moment that means nationalizing the banking industry, because a manager in a company has two big KPI to control and to manage the business, right? Quantity and price. So if you are trying to regulate quantity or price, that means to lead and to have in your ownership the industry and the free market. And I remember also that when I came in European Banking Federation, I had a big conclusion with them that trying to regulate the risks or to try to eliminate the risk from the free market means to eliminate the word free from the free market, right? Because the market means risks for a turnover, right? If you are trying to control from the legislative perception or perspective the risks, or as you say, dear Cristian, the volatility in the market, right, means to take out the word free from the free market. And all the countries in the region, as I said, had a big fight to enter in the free economy. I can say that as an evidence, during 5 years in Romania, between 2014 to 2019, a number of 50 legislative initiatives have discussed in the parliament, in the Romanian parliament. Me as a person, I have an average on 60 times presence in the Romanian parliament per year, okay? So I understand that from the economic perspective. If you have a contract in Romania or in other country for 15 years, as it can be a mortgage loan, right? That means you as an owner, or as a player in the free market, to take a close look to your contract 10 times per year and asking yourself if you still have that contract, or 150 times during that contract. This is about predictability in the market, okay? Which are the evidence? The evidence are that in 2011, the Romanian financial market registered financial intermediation, lending to population and company divided to the GDP for the other listeners. And this figure decreased to 26% today. So the financial intermediation declined very harsh, let's say, to 26%, taking us in the position of the last country in Europe from this perspective, comparing with the European average, which is 92%, right? Well, from the European perspective, you can say that if a fat person can be regulated, yes, maybe some kilos going down, it is good for the health, you know. But for some countries, which their weight can be 40 kilos, you know, to decrease the weight, it can be the disappearance. So other word is that to be said is also the banks in Romania decreased the volume of the branches with 40% during that time, okay, and the employees, the number of employees, with a percentage of 30%. So the market gone down rapidly, and this was the result of this inclusion of the legislative perception in the economy. So we have to ask ourselves if we want to defend the free market for the people, or we want to defend the people from the free market. Because the result of this question, it is that, as my colleagues says before, all this approach, populistic approach, legislative approach in the market means to be against all the players, but first against the consumers. And we have the experience in the parliament, in the Romanian parliament, when we discuss about capping the interest rates, and we explained that 30% from the population, let's say, are running month by month in taking loans from the shadow economy, not from the banking system, to pay their invoices. To decrease the interest rates from the banking system, right, which is a regulated industry, having the lowest interest rate in the economy, I have to remind that at that moment the legislative initiative asked to have a new interest rate, regulated interest rate, 3 times lower than the market average at that moment. And that meant at that moment to take out the lending from the Romanian market and give a good step to the shadow banking, or maybe to the black market. And I do not have to remind that Winston Churchill says that if you try to regulate a market, means to open a black market, you know, because Romania has this experience, Poland has this experience, all the countries in the region. We can remind to everybody that trying to regulate the prices in Romania meant to open a black market and to disappear the market. We have to remind that all the Romanian people has the right money, but not the right products. So no product, or no products to be said. So this is the question: do we have to defend consumers against the free market, or do we have to defend the free market? Because one of the people asked on the YouTube how the politicians can help can help people against the prices gouging. Okay, this is the best defense. The best defense, it is to support a free market, to support an economic approach. We have to remind to the politicians that to keep their word means to keep a right economy in the market, not to involve the legislative approach in the market. We cannot have a legislation to decrease the inflation, okay? We cannot have a legislation to increase the welfare directly. So this is what they are trying now. This is the populistic approach. Maybe it is good in Europe today to have a KPI to measure the populism. And if we are taking a look close to this, maybe we can go better and very close to the consumers. This is our perspective based on the evidence in Romania, and I believe also in the countries in the region. Thank you.
Thank you, Florin, DâNNESCU, for this very good insights. I want also to point out that interest rate, it is a key price of the economy, risk, default. So if you want to understand why this interest rate is higher or lower before caping it, if you want to understand why this interest rate is increasing, is decreasing over time, in order Yeah, sorry. The Secret Services. Okay, so I want to say that this price is very important because it includes a lot of very, very important things like inflation, liquidity, risk. And when you want to cap this, in fact, you are capping risk. You are capping the liquidity problem. You are capping the systemic risk of a country, and that's impossible. I'm talking with a lot of politicians and a lot of people that are not understanding why Romania pays higher interest rate than United Kingdom or than France. And I'm saying to them, because the risk in Romania is BBB, it's close to C, close to junk, and you cannot cap this. You cannot hide this very important information that always should be there. Yeah, it's a problem when you are doing this. And secondly, I want to say that the interest rate, it is always included in the financial assets valuation, meaning that you are using this interest rate not only when you want to borrow or to lend money, capital to others. You are using this interest rate to discount future cash flows, to evaluate, to price all the financial assets. And when this price is not a market price, is kept, is artificial, all these pricing endeavors will be totally out of the market conditions. So we should be very careful with this price when we are discussing about regulating it. It's a different price. Yeah, it's a different than other prices of the economy. Florin, BÂLCAN, now you have the floor to present your point of view in the end of this very, very interesting panel. Thank you, Florin, BÂLCAN, that you accepted to be together with us.
Thank you, Cristi, and thank you, everybody. I think it's a very nice and interesting discussion. From my side, with considering a bit the big discussion at European level in terms of the Consumer Credit Directive, I wanted to take a bit of an approach to show that one size fits all does not work, and I'm happy to see that this goes through countries, because Aga is saying exactly the same thing. So just a bit about myself. I'm Florin BÂLCAN. I'm the CEO of Provident Financial Romania, the biggest consumer credit non-banking financial institution in the country, which is not part of a banking group. And I'm also the Vice President of the Consumer Credit Council of the ALB, the trade association for non-banking sector in Romania. As a sector, we provide an essential service to Romanian customers by providing access to credit also to underserved customers. And there were a lot of discussions about how we are, doing the right things to keep them also served. We believe that sustainable access to credit is imperative for all socioeconomic groups, and in the end helps to support the economic and the social mobility of individuals. I think the dialogue has always been very important, and it's perhaps even more important right now with this Consumer Credit Directive review, a piece of legislation that would shape the framework for the consumer lending in the years to come. And we know that in the Romanian Parliament, the discussion around price caps for loans has a history of several years. And there were discussions earlier about is it or not a populistic measures. Definitely, I would assume that sometimes it was used as a tool in this respect. For us, we have always and we will continue to advocate for regulations that contribute to a well-functioning financial market, something that is designed to treat both the customers and the business fairly. Because we don't want to be in opposite positions, and we all share and support the concerns around consumer protection and over-indebtedness. And what we want to highlight to lawmakers is maybe a couple of things that they don't see from their lens, and so that to help them not to have unintended negative consequences for both consumers and the economy as a whole. Having a lower price, in theory, sounds very nice, right? I mean, who wouldn't like to pay less for the same product or service? But things are not that simple, and price is generated by supply and demand, as well as by costs for supplying that product and service. In addition, I think we need to do more to understand that certain financial mechanisms are maybe not that easy to explain. And Aga was telling us about the APR and how it's so easy to take you into very different directions. And we have heard in the public domain statements that, you know, an APR of 5,000%, inducing the idea that if you take one RON, you pay 5,000 back, which is absolutely not true. So if we take just the example of a 500 loan over 15 days, you'll see that the total cost is probably, I don't know, somewhere between 50 and 60 RON, although the APR is over 5,000%. So we need to have a clearer and a better look to all these mechanisms and try to understand how to better apply them. Because we think the NBFIs play a necessary role in the society by providing credit to lower income groups, often are overlooked by other lenders. But this comes with a price. Our funding costs, for example, are higher because we can't draw deposits, and the risks are higher too because we are lending to people who can't always meet their commitments in time. In particular, maybe for us, we have a large infrastructure of people and branches that allow us to serve the customers in any area of Romania in just a few hours, and this implies a higher functioning cost of well over 200 million RON for us. So therefore, you know, a one-size-fits-all regulation approach cannot work, and any legislation would need to take into account all these differences that exist between different players in the market and the customers they serve, because at the end of the day, the business exists because they serve a need. And we believe that the needs of the customer, banks and non-banks, are genuine. And a restriction that is disconnected from the realities of the market may make certain products commercially unviable. And it's important to remember that this will not make loans cheaper, but likely they will remove from the market different players and will leave the customers who need them in an even worse position. So as a number of you said, you can regulate the offer, but not the need. And ultimately, the people will have no choice but to resort to less scrupulous alternatives, unregulated alternatives, which are not safe, and you get to a sort of an untaxed black market. And I know that Aga referenced about Slovakia. I can give you the concrete example for Provident, Slovakia. So a couple of years ago, the government decided to impose a rate cap. The Provident business of 144,000 customers was closed. In short time, in news and in newspapers and in websites, unregulated offer loans appeared. So black lending market suddenly bloomed. So this is a very, very concrete example of a good intention that ends up with very, I would assume, unintended consequences. Now, if we consider the differences between financial intermediation between the Western and Eastern Europe, definitely we can all agree that each market has its own particularities. And member states should be allowed to decide by their own on what's really best suited to correct abuses and allow well-functioning market to operate. It's worth mentioning here that, for example, in Romania, we already have a formal price control measure for any sector, which was implemented by the National Bank in 2017 when it was imposed for the NBFI significant capital requirements for loans above a certain APR threshold. And even this year, we have a couple of adjustments to these NBR regulations. So we should remember that there are several other aspects beside the rate cap that are being proposed under the CCD review, which could impact a well-functioning market. And this makes the conversation between all parties even more relevant. So to summarize, we favor a balanced approach that takes into consideration both the consumer needs and interest, but as well the market mechanism of supply and demand, so that we keep the viability of the lending activity, and we take care of the realities in each market. We think a good solution can be achieved for all stakeholders in the market by following a couple of principles. Keep the flexibility, so not a one-size-fits-all approach. All the measures should be calibrated by taking into account the various particularities of the players in the market and the customers they serve. Have a thorough impact assessment in order to avoid unintended consequences for consumers, lenders, and the economy as a whole. And we know that this is perhaps the fact that is missing the most when we look at the measures that come from the Parliament. And not the last, we are all together in this. We really need the dialogue between regulators and the industry and try to create much more predictability in the market. Thank you. And maybe just one comment related to the first question, whether the price caps can how the officials can help protect the consumers. I would agree totally with Mr. Dâng NESCU. In my view, is the same story. Keep the competition. A real competition in the market is the one that basically will regulate itself the prices. And if the market acts freely under a regulated environment, then we will get there. And it will allow as well a larger palette of customers to be served, rather than cutting it and leaving a lot of people without really any options. Thank you.
Thank you, Florin, BÂLCAN, for your very, very interesting comments. I want to say that this conference is one of the main purpose of this conference is to stay on this side of discussions, debates, yeah, because if we want to discuss problems of the society, academia is the most appropriate place when you can do this. Yeah, without biases, without being accused that you are populist and so on. So here we are discussing about ideas, about arguments, and we are trying to find solutions. Before opening the floor to the questions that you can see on the comments section of the application, I want to point out the fact, one of the most important thing that I consider that you emphasized in your words. Yeah, we can see that the state, and I find this idea also. I found this idea also in the other presentations. It's a red line. Yeah, we are looking to the state intervention, and we can see that the state merely is fighting against suppliers. Yeah, so they are looking to the market and they are saying, okay, let's fight with the suppliers and let's introduce a lot of barriers, a lot of restrictions to them. But if we are looking to the market sides, we can see that the producers, the suppliers of, in our case, financial services for consumers, yeah, their supplies are limited, always are limited. And the demand is unlimited. So by restricting, by regulating always merely the limited side of the market and leaving free the other side of the market that is unlimited, the imbalances finally will be there. So it's a good point that you highlighted here, yeah. So let's have a balanced approach. Let's take into consideration both sides together, yeah. Do not create measures, regulations that are imbalancing a lot these market powers, yeah, because we are talking about market powers here. And unfortunately, the politicians that are not understanding so well these market powers and how the markets are functioning, they are doing day by day the same mistakes. So Thank you for what you presented here. And now I'm opening the floor to all of you, because we still have 15 minutes, around 15 minutes, to discuss about what the people asked us. So I want to check if you are seeing the comments, you are seeing the questions, yeah, on the right side of the platform, and you are free to answer to any of them in any order you want. Yeah, we can start with the first question. Florin BÂLCAN already answered to the first one. What can officials do to help protect consumers against price gouging? Yeah, maybe one measure, key measure, or one action, key action, fundamental action that you recommend to be applied now by officials for this customer protection. You already said something relevant about this, but let's emphasize again a few ideas. So you have the floor to answer to this question.
So maybe if I may, in just a few words, I will fully support what both actually Florian said, that the key issue is to boost free market and the competition, because if there is a high competition, the prices usually go down. And the second one is to also promote financial education, because it's key that the consumers know what contract they are entering into. And if they know, they will neglect those that are not in their interest, and they will choose those that are the best for them. So free market and the financial education, I think that there are key measures.
Please feel free to interview in the discussion if you want. If you have other opinions or something additional to be added. If so, not,
if I may,
yeah.
Just to add something to Agnieszka, the Romanian experience says that banks in Romania are measured, or the industry, the banking industry in Romania is measured to have a high competition, okay, with the theoretically approach and the indicators, everything. Despite this, as I reminded, the volume of lending in Romania decreased a lot, the volume divided to the GDP, and the financial intermediation is the lowest. So these are the results, and these are demonstrating what the colleagues says before, right? If you are controlling the offer, controlling the price means to control the offer at the end of the day, okay? Which is, as you says, Cristi, that means it is not balanced with the demand on the other side, because the demand is remaining there. We cannot serve the demand, diminishing the offer. So the price at the end of the day is going up, not down. This is what is happening, right? Take a look to the European political approach in respect of the energy subject, and we are seeing what they have not to do to restrain the prices gouging, okay? Their involvement meant at the end of the day to increase the prices. So it is the same question at the end of the day. Do we have to defend the free market, or do we have to continue in this way? Thank you.
I think that somehow we answered to other few questions. As you can see, there is a question that there are some questions that are introducing in the discussion the energy sector and the current measures applied by the government in order to fix the price, to subsidize the price, and so on. It's the same. In fact, we are talking about the market intervention, the intervention of the state in the market. Of course, as Florin already said, these kind of measures are merely increasing the price, because are hitting the suppliers, yeah, not by let's say by saying that all these measures are for consumers protection, yeah. On behalf of these consumers, the state are always hitting the suppliers. So I think that all these measures that today are applied in the energy sector, fixing the price, subsidizing the price, finally will fail to lower the price in the absence of measures that are improving the market conditions on the supply side. Yeah, so it's the same. There is a question for Mr. BÂLCAN. We can also answer if you want. Why do you think when the central bank used credit expansion to artificially increase the quantity of money and to prefer to lend money to larger companies instead of smaller companies? Yeah, so normally the state by central bank, yeah, not only in Romania, the state multiplies the money and direct this quantity of money, especially for bigger players of the market. Yeah, how do you think that this is a problem for the market? If you want, you can answer. If not,
yeah, I was looking at this question and I was thinking that you know, having Mr. Cristi POPA here would actually make it even more relevant for him to answer this one rather than me. So I don't know, Mr. POPA, if you think it makes more sense.
Yeah, sure. I can try and answer. The central bank's policy is neutral from a sectorial point of view. The central bank is not doing industrial policy, so it's not the central bank that is picking smaller or larger companies. So this would be my answer.
Okay, because maybe okay. I was thinking that maybe they refer more to the, you know, measurements, the last measurements from the government within these pandemic periods when they try to help, you know, a lot of the companies and to support them there. And maybe from this angle, obviously the impact of the larger companies on the economy, on the full Romanian economy, is significantly bigger than of a small company. However, if we would have a very important small company sector, then this would be much healthier. And I would say that Poland is a great example in this respect, where they went and they have a significant impact of the small companies and a lot of the small producers that are actually supporting the economy at a much bigger stage than we are, and perhaps it's something that we are missing significantly. So yeah, I think that in reality that's one of the sectors that we continue to look, and it would be great to be able to pump a lot more money into and make it easier for smaller companies to actually survive and create a bigger economy health.
Thank you. I have a question for Mr. Dâng NESCU. I dared to raise that question because I was also involved for a while in the development of this IMM Invest program. So one of the most important fear about this program, that is one of the biggest guarantee program for small and medium enterprises in Romania. I heard about 35 billion lei, more than 35 billion lei credits already granted to the small and medium enterprise sector in almost 2 years of the program. And one of the most important fear with this program was that is a program based on state aid for a limited period of time for pandemic reasons. How do you see the unwanted effects at the level of the economy? Yeah. Do you think that this program and other kind of programs already developed all over the European Union at the level of small and medium enterprises can generate unwanted effects? And what could be these unwanted effects from your point of view? Because you have a good image about banking sector. Yeah, you are looking to big data, big situation, and I think that you can have a relevant opinion on this point of view, not only on IMM Invest program, or yeah, all these schemes financed by using the state aid now in order to pass the pandemic situation? Thank you.
Well, I guess the general opinion of mine is connected also with the medicine, let's say, okay? If you are trying to give some vitamins to a certain person, it is good for a moment, for a while, right? Because it's needed at a certain moment. So you cannot continue all the time, because practically you will create on a long term a disequilibrium in the market. This is very important to understand. So as we have in Romania also the program Prima Casă, which means in English the first house, right? Which was a program designed also with the state and the banking system, as it is also in MMA Invest, financing SMEs in Romania by the banks with the state guarantee. This is the program, right? And it meant at that moment a very good involvement or a partnership between state and the banking system, because it was a big need in the market to continue the business and to have a boost, a liquidity boost, let's say, and also a working capital boost for the moment. But of course, this intervention to guarantee some of the players and maybe discriminate other players, this very fine tuning in the economy is very important. Each small disequilibrium means at a long term a big disequilibrium, right? And that means, yes, these initiatives are very good in the right moment in a specific context. But for the long term, the free market must come back and regulate by itself the economy. This is my perception. I have to add that it was also a good moment for the Romanian banking industry as a strategy. One of our pillars in the strategy is to increase the number of SMEs which can afford a loan, a banking loan. To afford a banking loan means also to have practically, purely an accounting in the company, to have a business plan, right? To have the perception and the perspective that you need for your own investment to have a loan, right? Or maybe to continue to have the pride not to have a loan, because in Romania we are still discussing about the pride or of being independent in face of the loans, let's say, which means to be independent of investing, so of no investing maybe at the end of the day. So the good figure at the end of the day was if the banking system before this measure registered an average of 1 approved loan for SMEs out of 7 demands, okay, the result was that one of the approved loan result from the MMA Invest program out of 3 demands. So it was a very good dynamic. It increased the number of applying for loan in Romania, which is very important. But I do not believe for the long term in any economy we are discussing that this intervention at the end of the day, despite it is a help or a boost or supply of capital, you know, it is an intervention on the end of the day. So this is my perception. Short-term intervention during crisis are well expected, and it can be a good approach. For long term,
we have also a similar comment with your answer on the platforms. I want to close the panel, but I do not want to close the panel before a very short question and a very short answer from your side. But before addressing the question to you, I want to say a few words about small and medium enterprise sector. That is a very risky one, as you said. So by keeping interest rate for this sector, in fact, you will destroy the idea of financing the sector because the banks will avoid more to provide credits to a very risky sector with a very narrow, very low, limited interest rate. Yeah, it's a problem, and the effect will be the opposite. Yeah, instead of having more small and medium enterprises accessing loans, finally, by keeping interest rate for a very risky sector from economic point of view, finally you will fail to solve the problem, economic problem. The last question, and very short answer, very short question to you. Okay, we are looking to politicians now. I avoided to invite politicians in this panel finally, and it was a good idea to do this. So you are professionals coming from your financial industries, financial sectors, and the question is like that: how we can efficiently determine the politicians to listen the professionals of the market and to do not continue to be populist. How we can do as professionals, how we can do as a community to fight with their populism. A very short answer from your side. Thank you.
Maybe if I can answer, although I know that both Mr. Dâng NESCU and Mr. POPA are very active in these areas, but it's something day to day for them. But for us, what we try to do is still, when we talk about financial education, I think we need to do it in all the fronts. So not just for our customers, but as well for the people in the Parliament. So with every occasion that we have to talk to them, we actually try to give much more explanation about what happens in the market and what we see from our customers and what is the reality in Romania, in the rural areas, everywhere. Because in the end, that's what matters for them as well. It matters for them in the end to know that the people that elected them are doing fine. So what we are trying to do is explaining to them how this can happen. So what are the measures that will keep the right balanced approach between keeping the right ship for the country, but also keeping the right ship for the customers and for the people on the ground.
Thank you.
Maybe I will also try an answer. I think publicly communicated about the issue and making it accessible for the people. I mean, talking at a level that is accessible for the normal citizen. So talking about issues, about the problems, so that the people can understand this, even if we're not. I mean, it's not when we will not be popular in the politician side. I think it's our duty as professionals and as citizens to vote.
Thank you.
Well, looking into my experience, I may say that the question is easy, but the answer is not. Well, what we try to do, we try to make the market transparent to the regulators. So we try to publish a lot of data and statistics just to show how it looks like and just make them taking a very wise decision based on the market research. And we also try to engage them in the discussions about the markets, just try to meet them and to explain how the market works, because we see the lack of this knowledge. And I totally agree with Florin that we need to educate not only consumers, but also the politicians, also the journalists, because we see the lack of knowledge, of basic knowledge in all these fields. So there's a lot of work to be done.
Thank you.
We have a strategy for that, Cristi, if you allow me. Romanian Banking Association consider, and you know that we are writing about this, about the populism directly, straightly. So because we are considering that one of the major route, let's say, for this negative evolution is populism, right? So our strategy it is, as our colleague says, financial education being our first pillar. And in this pillar, we are having 5 levels of communicating and making financial education to the decision makers, to media, to population, to companies, and to our employees. These are the 5 levels, okay? And we are active and transparent in that. And to communicate with the politician, which is very important, central important, let's say, it is to be, of course, respectful, more discreet than ever, okay? And because I saw in a movie some days ago a very good quote, discretion, it is a virtue. Without this virtue, there are no virtues, you know? So this is one of the rules. And of course, to keep your reputation clean, very important, because you must be very good voice in the market, an economic voice, to equilibrate the economy to politics. This is very important. We are learning in the schools today about the economic independence and political independence. In Romania, it is a very big gap on that, and we are seeing also on the European level that this gap is increasing, which is very sad. So we must have a strategy for that first, and after that to apply it. Thank you very much.
Marian, can you dare an answer to us also? How we can find politicians in 1 minute, please?
I believe it's important to make a difference between tactics and strategies. And from my point of view, most of the politicians are oriented now to let's say, rapid action to solve some issues, like fighting with fire. But we need also a long-term strategy. And we have to explain them and to understand that they need also tactics and also strategies.
Thank you to all of you that you spare some time with us, with our community. I hope and I think that these discussions were very, very interesting and very, very applied. I will close the panel now by announcing the next panel that will start in right 10 minutes, and that will be about green central banking and financing. A very, very up-to-date problem now at the level of European Union. Everything will be greener, including financing and central banking. And we decided to include in this conference this topic also. And this topic will start in 10